Everyone, my name is Dhamija. Welcome to my channel. I'm a full-time derivatives trader, investor and a mutual fund specialist. I am NSM qualified and AMFI registered mutual fund distributor. Usually I make videos on the market on how the outlook is, but today it is slightly different. Today we are going to talk about the two of the hottest things that are happening right now, which is gold and silver. And I will present to you with arguments where these prices could be headed and what exactly is happening. So for example, last night, that is Friday night, in the international market, silver actually closed 3% up. Now this will actually straight away mean that silver is going to open at about 3.2-3.3% higher in INR, considering that INR is going down against the dollar. So it's just an unstoppable rally that is happening in these two metals. Gold has already reached an all-time high last night again in international markets, and silver is making a new all-time high every day for the last, I think, almost 15 days. And it's been a relentless rally that is going on. So I will take you through a lot of different things, like what is the gold silver ratio, what is the gold ratio to Nifty, how much gold does central banks have, what is fueling this rally, how long can this rally sustain, and so on. So there's lots to discuss in today's video. So let us begin. Let us begin with this first particular chart. This is your chart for the gold to silver ratio. Now, as you can see over here, this is a very important chart, and you can see that there are certain ratios that it typically follows. So gold to silver ratio is typically in the range of somewhere around 80, and this is, if you can see, right from 2002 this chart is there, when the ratio was close to about 80. And then in this 2008 crisis, when gold actually went up tremendously, then this ratio came to about 88, 89. It peaked over there. And then subsequently silver rallied, and you can see in 2011 silver had made its all-time high at $50. That is when this ratio came down to 30. And from 2011 to 2020, this ratio actually crossed 80 and it went to 126. This is the peak of the valuation of gold, which was higher to silver. Finally this came down because silver actually tripled in those 1 or 2 years from there, and again this ratio came to about 80, and then this has been going on in this range. Now last what happened in about 3 months back was that gold again peaked while silver was lagging behind, and this ratio again went to 105. Now after that, we have seen for the last 2 months, silver has been outperforming gold, and this ratio is coming down. Now you can see that this ratio is at 80, so which is more or less at the you can say averages. But can it go lower? That means, can the price of silver go lower from here? It's absolutely yes. So we have seen that the bottom that was made in 2011 was somewhere close to 60. So if this ratio has to go to 60, then silver can easily rally about 20-30% more from these levels also. So this is one useful indicator to have. The other thing that is worthy to note is what is the price right now. So as we speak, 10 gram of 24 karat gold is trading at about 1,16,385 in Indian rupees. So this has just been going up, as you can see, and there is just no stopping it. And it is actually more pronounced in INR because INR is depreciating against the US dollar every day. So this keeps on going, and right now gold is also going up in US dollars. So this number is now looking quite large. It's looking at almost, we are nearing 1,20,000 for gold. And if this continues and if INR continues to fall, I won't be surprised if this number even goes higher. This is what happened in silver overnight. So if you see, silver actually closed at 3.42% higher, as you can see over here, 46.56 per troy ounce. This is in US dollars, and you can see the silver chart over here. The silver rally actually started and it has just been one way. So if I look at the 6 months chart for silver, as you can see over here, it made a bottom in April at 29, and right now we are at 46. So that's a huge, almost 50% rally has happened during this course of time. If you look at the India silver prices, they are nearing 1,43,000 for 1 kg. This is what the websites are showing, but some websites like Money Control, etc., also showing silver rate yesterday at 1,50,000. So it is nearing that number. It is 1 lakh. You call it 1,43,000. If you buy physical silver, then in any case you have to pay a premium. So it will be easily, somewhere in in this range. Now this is another interesting chart that I would like your attention to. This is the gold chart in INR. Now you can see over here that how gold has steadily gone up, and the gold parabolic move actually has come in from 22. This is the exact time when the US confiscated Russian assets. So what was happening was that earlier the international SWIFT system, everyone was keeping US treasuries as their reserves, world reserves. But after the Ukraine war, Russia's $500 billion assets were frozen. And that is when all the central bankers realized that they need to have a hedge against the US dollar. So during that point in time, a lot of central bankers around the world started holding gold, and that is where you are seeing that the demand from central banks has far outstripped any other demand, and hence the price of gold has actually started to go up since 22. And I will take you through the chart as well of what is the basic holding of the countries of the central bank. So if you see over here, this chart indicates how much gold is there in the world central banks right now. So US is number one officially at about 8,133. This all gold is stored in Fort Knox in US. Germany is the second biggest with 3,350 tons, followed by IMF at 2,800 tons. Everyone will remember in 91 how India had to pledge its gold to IMF. So IMF is a custodian of gold as well. Italy, France, Russia and China all have gold reserves more than 2,000 tons. Switzerland is about 1,000 tons, and number 8 is India at about 900 tons. So we are not in the top 3 or 4 in terms of our gold holdings at central bank level, and perhaps that could be one reason that we are also buying aggressively now. The demand from central banks keeps on pushing the rate higher. This is the silver chart. Again, there is in Indian rupees, there is again this following a similar pattern. When from 22 it just went up, but silver is getting its parabolic move now. Okay, so you can see over here, this is the parabolic move starting in silver, and that is where I feel that this move in silver can be even more pronounced than ending at $50, which was its previous all-time high. So just a brief history about silver I'll give. So what happened was there was a famous story of Hunt brothers in 1970s. So they cornered a lot of silver, and silver was a speculative asset along with gold in 1970s when the inflation was running very high. And in 1980, silver peaked at a rate of $50 because of course it was frenzy. From $50 it consolidated for next 30 years. It went to $3 also. So you can see there was a 90% decline in the price of silver in USD. And in 2011 it again touched 50 or 48, 49, something like that. So after almost 30 years it went to the same level, and then again it went to hibernation. It came to about $9-10 in about 2018 or so. And from 2020 COVID, that is when silver, after a huge bear run and everyone had given up on silver, suddenly became 2x 3x. So it went to about 25-30, and the last 2-3 years it has been in that range between 25 to 30, 35 odd. Now it is broken out, and still it is not broken the all-time high in US dollars, which is $50. So right now, once it breaks 50, then imagine what is going to happen. So we are at 46 something. 50 looks like it's going to get taken out anytime now, and once it breaks 50, then the real magic will happen. So I thought I'll just give you a brief history about lesson about silver as well. What else do we have? Yeah, this is an interesting thing. So this we have. This is basically the historical context of gold-backed currency. So there's also a talk of that earlier. What used to happen was that in the world, the currencies were pegged to gold. So let's say if you have 100 rupees of currency, then that will be backed by 100 rupees of gold in all the central banks. But the gold standard, so to say, was broken in 1971 by Richard Nixon, wherein they said that we are not going to back our treasuries by gold. And from there, the huge inflation began, and because of money printing was free. So 1970s is marked by the biggest inflation in US history, where gold also went up some 10 times, and the interest rates went to as high as 19%. Just imagine 19% in US in 1981 or something, when Paul Volcker came and he raised the interest rates. From there, that broke the back of inflation, and then inflation came down. So earlier gold, the currencies were backed by gold, but this was taken out. So this was just a brief history of that if anyone wants to read about it. So from basically the point to see over here is August 15, 1971. President Nixon ended the convertibility of the dollar to gold, creating a fiat system which became as a Nixon shock. And in 1980s, it was basically the interest rates peaked, and there have always been calls to get back to that fiat currency, to the gold standard from the fiat currency. If that happens, then gold can become 10x from here. There is no doubt about that. There's another interesting thing that was happening was that LBMA, which is London Bullion Metal Exchange, and COMEX, which is in US, these are the two metal exchanges that exist in the world. So over here the trading of gold and silver happens. So there are some reports earlier which also came out about 3-4 months back that you can take physical deliveries of gold and silver in these exchanges, but and the settlement time was T+1. So let's say if you buy a future of gold and you say that I don't want money when the contract expires, I want a physical delivery. So if you have a certain size, which of course it's not a retail size, if you have an institutional size over there, you can demand physical delivery. So what is happening is that there is huge amount of physical delivery that has been happening over the last 6 months to 1 year. And somewhere around April, May, there were reports that started coming out that there is a shortage that is happening. So earlier deliveries used to take place in T+1, T+2, transaction plus 1 or 2 days. But now it is taking 6 to 8 weeks. Now there is no way to confirm these, but these is what some of the reports have been indicating, that as you can see over here, that the delivery time for gold and silver, basically gold, has increased to 4 to 8 weeks of delays, right? So this is not a good indicator, which basically indicates that there could be some stress in the system, and which can further fuel the price rise. Now this is a very interesting chart I wanted to take you through. This basically shows what is the value of each asset right now by market cap. So if you look at gold has crossed 25 trillion worldwide. Then there are the US companies like Nvidia, Microsoft, Apple, Alphabet, etc., which are all $2 trillion. Just for context, India's GDP is about $4 trillion. So you can imagine that these companies are as big as India's GDP. Silver is at $2.6 trillion. So silver is finally finding its place in the sun. It's finally ahead of Bitcoin at 2.1 and Amazon at 2.3 and Meta. So you can see, that slowly how silver chart is going up, whereas you look at the other charts like Amazon, etc., their last price 30 days they have been kind of flat to negative. So gold, silver are the ones that are leading this particular charge up. And finally, I'll show you one chart, which is the most important chart, which is the gold to Nifty chart. Now, because we all are market participants, we ask that where should we invest our money, and my suggestion always has been that you should have a balanced portfolio. You should have a proper asset allocation, and recently one of the leading brokerage firms in the world have also said that your allocation of 60-40 doesn't work anymore. It should be 60 now equities, 20 gold, and 20 debt. Earlier it used to be 60 equities and 40 debt, which was suggested as a model portfolio. So my submission is that you should have a proper asset allocation, and you should maintain these numbers and try to get back to these numbers. Let's say if your equity falls a bit, then you buy more equities to get it back to 60. And so if you maintain a proper asset allocation, then you are likely to do well. And this is where I help my clients as well. So I help them make a very strong mutual fund portfolios. So I'm a mutual fund specialist, as I said. So if any one of you is interested in creating a strong, robust mutual fund portfolio, which is free of cost, you can contact me through the Google Sheet. If you want to get your mutual fund portfolio evaluated free of cost again, then also I do that. So you can fill up the form and I shall get back to you. So asset allocation is the most important. Now the next chart is very, very important, which basically shows gold to Nifty ratio. Now what it indicates is that how much is the price of gold versus Nifty. So as you can see that it has been steadily coming down, okay, and both are in INR, but it made a peak when Nifty actually cracked at about 16, and then Nifty rallied from there and it came to bottom at 7.1. Now from 7.1, if you see, gold has been steadily rising, and this, especially over the last 1 year, has now gone to 13. So we are somewhere closer to the high that we had made last time in April 20th at about 13. So this basically indicates that the markets are getting relatively cheaper compared to the price of gold, and that is primarily because of the rally that has been going on in gold. So these kind of ratios help for us to know where we are. So that's it from me now. I hope you enjoyed today's video. The main point of this video is that in asset allocation, you cannot afford to miss gold and silver. The way they are going up in international markets, this is a frenzy that is just starting, and retail is not even a part of it. It's all mostly institution buying that is happening. Once retail gets into it, then these numbers can go even higher, possibly. So your allocation should be there. If you don't have it, you can consider doing it through SIPs, etc. Please consult your financial advisor before taking any such decision. But asset allocation is something that each retail investor should have. And if you want any help in asset allocation in your mutual fund portfolio, in evaluating a portfolio, you can get in touch with me and I'll be more than happy to help you. It's all free of cost. So that's it from me now. I shall see you tomorrow with my view on the markets and how I see markets have been in a tough spot. So I will do a detailed analysis tomorrow of what levels can we touch and why the pressure is building up. So we will discuss all that in tomorrow's video, but today's video was dedicated to gold and silver. I hope you enjoyed it. If you did, please do subscribe to my channel and please do like and share this video, and I shall see you soon with another update. Take care. Bye bye.